Hey guys, and welcome to the Working Money channel. So it was brought to my attention by Val Jester Log. I gotta thank him for just sending this to me. Apparently there is another imposter, a Twitter imposter, trying to pretend to be Working Money channel. The handle, if you guys have seen it, is Working Money CHA. So this guy is an imposter. He only has 6,643 followers. My moniker is Working Money CH with 33.1 thousand followers. So if you guys could, Working Money CHA, please report this guy. I will leave the link in the description of the video. And I'm thinking maybe I should start putting that thing beside my name with the amount of followers I have so that people know it is the correct Twitter account. I was trying to hold off on that. I was thinking maybe the scammers don't really want to impersonate me so much as they want to other people, but it's looking like I am also a victim of Twitter scams. So just to let you guys know that, we've got BTC Fuel here bringing up something interesting. The past crypto mania looks very similar to the gold mania in the 70s when comparing to the crypto market cap. And for example, VeChain, the similarities are quite clear. It also shows the potential for at least one extra move down. So guys, here's, I guess first, here's the crypto market cap. We can see similar moves when we were trending to the upside, and then we were trending sideways, eventually falling down into a bear market. Now it is looking like we are starting to move up. And when you compare that to gold, okay, that would be over here. What BTC Fuel is suggesting is that there could be one more move to the downside before we continue our way up, and so VeChain is in a similar position. He just uses VeChain here as an example, but I think the rest of the crypto market, all altcoins right now, are trending in a very similar position. So, you know, trends on charts, basically just psychology on a page. This is trader behavior, okay, psychology 101. This is how people trade, and it doesn't really change over time. This is why we can look at gold in the 70s or look at other bear markets or other bull markets and find similarities in charts. Anyway, we've got Bitcoin here right now on the weekly, trading at 24,400. The flip side to this, though, is something I've noticed in and around here. This is the last, obviously the last bear market from back in 2018. We found it calming down, then Bitcoin fell off a cliff, traded sideways for a bit before it kind of found its way up. And take a look at that. If I punch in there, you guys can see a bunch of small green candlesticks on the weekly, short bodies, short tails, and short wicks. Now, you don't see the shelf here, but after this big move down, we are seeing something similar here, okay? Whoops. Seeing something similar. Let me bring up that pen tool again. With the short bodies, short tails, and short wicks moving to the upside before we saw a big move to the upside and then a bigger move to the upside here. Where we were also noticing that here, okay, coming out of here, although this body was a little larger, but by and large, short bodies, short tails, short wicks before that move to the upside. So, you know, conversely, despite the fact that we could in fact see another move to the downside, which I am also preparing for, this is still looking quite promising. Let me bring up XRP here on the weekly, and you guys can see XRP just kind of following what the rest of the trend is doing. Nothing out of the ordinary for XRP at this moment, despite the fact that a new Ripple report has revealed that 76% of financial institutions expect to use crypto by 2025. I guess they're not getting on board and buying their crypto assets right now. And so this report is projecting 2025, courtesy of Ian Binns here on Twitter. He was the one who posted this. So this is ultimately going to be the time when we finally see that mass adoption on a real world level. At least this is what this suggests. And considering this is a report that was put out by Ripple, and considering we know Ripple's connections to the World Economic Forum, the World Economic Forum also putting out projections on how they see the world going. Projections or just telegraphing, considering they have a very strong influence on what happens sociopolitically around the world. Anyway, this is saying 76% of worldwide financial institutions want to utilize cryptocurrency over the next 3 years, provided that legislation permits it. So this is the biggest pain point here in the United States. We're still sorting that out. There are other countries around the world where, you know, by and large, there is some sort of regulatory clarity, but it's going to be, since this is going to be a global phenomenon, it's going to have to be across the board. We're going to have global regulations, or at least national regulations, but that fit a global framework. And so this report was published a couple of days ago. Meanwhile, at 71%, somewhat fewer businesses think they will employ crypto in the next 3 years, which is a departure from the general trend of firms being more open to digital assets and more hopeful about their advantages. And payments, this is what most companies are seeing as possible use cases for cryptocurrency. We know that, there are a lot of different types of cryptos, and some are labeled as currencies, others are, created for other purposes. But for businesses, they are seeing this as, in that traditional way where you have cryptocurrency, you can use them for payments. The widespread usage of cryptocurrencies for payments is the most important factor for businesses and financial institutions to take into consideration when deciding whether to or not include crypto in their portfolio. The utility of cryptocurrency as a hedge of some kind comes in second, while the associated use of crypto as a bridge comes in third. So the exact use case that Ripple has set out for XRP. Asked more specifically why they would store cryptocurrency, 50% of respondents named using it as a hedge against inflation, which I've talked about a little bit on this channel, a currency for making payments, or an asset to lend, or collateral for borrowing as one of their top 3 reasons for doing so. Interestingly, whether owing to their trust in banks, their existing connection with them, or some other aspect, the majority of customers, or 65% questioned internationally, said they would purchase cryptocurrency via their bank if their bank provided it. So, a lot of these financial institutions and customers are saying, yes, we would use it, but there has to be an easy onboarding, offboarding way to do so. Us in the crypto community, we have kind of grown along with those teething pains with the crypto industry. It was a lot harder to buy certain cryptocurrencies in 2017 than it is today. I remember back in 2017, I was actively searching out a way to purchase XRP, and I had to go through this whole rigmarole of onboarding my money on one exchange and then converting it to something and then sending it over to somewhere else, and then, that was the exchange that would sell me XRP, so I would convert it. Anyway, it was a big problem, and I don't think many people are going to go for that, and I feel like in a lot of ways, that is still the way we buy cryptocurrency. I mean, it has gotten a lot better since 2017. Nevertheless, for use as a currency, for use as a bridge, or for use as a hedge, this is what people want. Now, the other day, I talked about Jim Rickards and how he was talking about a payment currency versus a world reserve currency. And if you guys didn't catch that video, I will link it up here in the top right-hand corner. But Digital Asset Buy posted this, another interview with Jim Rickards, explaining exactly what he meant by a payment currency and how we could be seeing this sooner rather than later.
It's important to distinguish between a payment currency and a reserve currency. Okay. The dollar dominates both realms. But it's much easier to replace the dollar as a payment currency. If you have enough parties that agree, you can use baseball cards or bottle caps if you want to.
Which is what Russia's doing right now. That's a payment currency in that scenario.
Correct. Yeah. That is already going on. Those talks are fairly advanced. There's, the BRICS, Brazil, Russia, India, China, and South Africa, but it's now morphed into the BRICS Plus. They've invited Iran, Turkey, Argentina, Brazil, and other countries to join that group. There's something called the Shanghai Cooperation Organization, led by China and Russia with some Central Asian states. And there's a third group called the Eurasian Economic Union. It was sort of Russia's answer to the EU, but that involves, Belarus, some Eastern European countries, Russia, and some Central Asian republics. So those 3 organizations, all multilateral, and you say, they're just emerging economies, who cares? No, we're talking about half the population of the planet, more than half of the global GDP, and major oil exporters and natural resource producers, strategic metals, agriculture. This is a big deal. They are already working on these channels. They're actually doing exactly what John Maynard Keynes wanted to do here at Bretton Woods in 1944. They're talking about nobody wants the ruble as a payment currency or the Chinese yuan. That's not going to happen. Right. But they could invent a totally new currency. Call it whatever you want. I mean, John Maynard Keynes did. He called it the Bancor. Backed by, at first he said a commodity basket, so much oil, so much wheat, so much gold, etc. And then he said, but oil's not really fungible. There's 70 kinds of oil based on viscosity and sulfur and all that, and wheat, it spoils and whatever. So let's just go to gold to simplify it. So a lot of times you end up with gold, not because it's shiny and pretty, but because it actually works. Mm-hmm. We're going down that path. In the meantime, China's talking to Saudi Arabia about selling or buying oil for Chinese yuan. Russia's talking to India about they don't want Indian rupees. I mean, how much curry do you want to buy? But they're talking about accepting the UAE dinar, which is coming along. Dubai is a major financial center, transshipment center, and if you have dinar, you can use them for something. And India's got a lot of dinar because there's so many Indians in the UAE who are sending remittances, and then other transactions going on. So this is all happening.
Where does it go from here? A lot of interesting points that Jim Rickards mentions in this clip. Now, the clip goes on for about another minute. I will link it in the description if you guys are interested in listening to it till the end. But some interesting points. Of course, a payment currency, very different than a world reserve currency. It's going to take a lot to debase the US dollar as the global reserve currency, but that's not to say that there are a lot of countries around the world that are already starting to use a different type of payment currency. But then he gets into this idea that, with Russia and India and China, 3 countries in the BRICS organization, that they might not want to necessarily hold each other's currencies. As he made that joke about owning, how much curry do you want to own, really? If you're going to hold rupees versus the Russian ruble or the Chinese yuan. So what is it that we can all kind of come to a conclusion on that would work for everybody? And so they're going to have to make a payment currency. And even as he mentioned, it could be something that is supported by a basket of commodities or what have you. But then he said there are even issues with that. Oil, there are different types of oil, or wheat. If you want to use wheat, that could spoil. And then he says, at the end of the day, what a lot of these countries decide to is to just have gold as that backing, not because it is bright and shiny, but because it just works. So a perfect recipe for a currency, a global currency like XRP, to be able to thrive not just in the Western world, but globally. It is not tied to one specific nation. Anybody can use it. Anybody can transfer value with it. He even mentioned that fact that, and this is interesting, the fact that many Indians hold dinars because a lot of them send remittances back from the UAE. And so, how do you solve for this? Of course, leverage XRP for that liquidity in order to transfer whatever currency you do not want into a currency that you do want. So if you guys didn't catch the video I did on Jim Rickards the other day, I suggest you watch that one as well. This is a great complement clip to that video. I want to keep moving, guys. Michael Branch bringing this to our attention now. Stuart Algorand, Ripple's in-house counsel. He was just named as one of the most influential legal execs fighting for positive crypto regulations. This was released a couple of days ago now. I didn't get a chance to talk about it, so I'm just going to touch on it briefly. So this news outlet, the information added him among the top 10 individuals working to shape how the cryptocurrency industry would be regulated. As the SEC ramps up enforcement action and Congress considers crypto bills, I wrote about some of the top policy and legal execs hired by crypto companies and VC firms who are trying to shape regulation and policy. And you guys can go to the article. It will be linked in this article, which is going to be in the description of this video. The list comprises legal execs hired by blockchain and crypto-related companies to ensure compliance with government laws. Other top legal execs on the list include, and then it lists a bunch of people here. And then Algorand is honored in the achievement. Celebrating the achievement, Algorand took to Twitter to express his gratitude. He said this down here: this industry is growing globally, but in the US, we are stuck with innovation and the jobs behind it at stake. Hope everyone, yes, you too, Mr. Hinman, on this list works together to make things right. That was the statement from Stuart Algorand. So he is now being recognized by the crypto community as one of the top players in the space, one of the top lawyers, one of the top advocates for positive crypto rules and regulations. Of course, is it any surprise that he is also Ripple's in-house counsel? Regardless, it's good news either way. BondCrypt XRP bringing this to our attention. So crypto platforms, because of how the SEC is now looking to go after exchanges, I'm feeling like this is becoming more and more of a reality for crypto exchanges. Crypto platforms say they are exchanges, but they're more like banks. So here's an article kind of talking about those blurred lines. There is a well-known saying shared by both crypto experts and skeptics alike: not your keys, not your crypto. The phrase, popularized by Bitcoin entrepreneur Andreas Antonopoulos, refers to how the contents of a crypto wallet are the property of whoever has access to that wallet's digital keys. This means that unless you personally have the keys to your crypto assets and store them offline, you are vulnerable to hacks, scams, and bankruptcies. And this is why I always advocate for a cold storage solution like a Ledger Nano, which I do have an affiliate link in the description. If you guys still don't have a cold storage solution, you can use it if you want. You don't have to use it. But aside from that, right, it should be the responsibility of the crypto exchange to keep your crypto safe. Of course, offline storage requires extra level of understanding, so on and so forth. Enter crypto exchanges like Coinbase and Crypto.com, which offer simple, convenient platforms for users to buy and sell cryptocurrencies and NFTs. However, the crypto crash has revealed that a lot of these exchanges are still vulnerable, like Celsius and Voyager. Until very recently, crypto exchanges were all the rage. Crypto exchange companies market themselves as platforms for users to buy and sell crypto, but they also function like stockbrokers, and more concerningly, their core business models quite closely resemble banking. When you have exchanges that are offering you yield, this is when they start turning into banks. This is when the lines begin to blur. Traditional exchanges like the NYSE rarely go bankrupt, and since they do not offer account services, if they do go bankrupt, their clients are not on the hook for any losses. Brokerage firms like Wealthsimple do sometimes go bankrupt, but their clients' portfolios are held in the client's own name and accordingly may be transferred to a different broker. In the event of fraud, both Canada and the US provide automatic insurance for lost assets. And so they also mentioned that certain banks are insured, and herein lies the problem with exchanges like Celsius and Voyager. They marketed themselves as exchanges and brokers, but they were not insured for holding your digital assets, which means that anything happens to them and you invested and had coins on Celsius or Voyager, well, this means that your coins are at risk. And so, if something happens to these companies, like what we have seen over the last several months, you may lose your cryptocurrency. And, I'm feeling like this is where the SEC kind of has a point, but at the same time, I don't want to give them too much power because we know how shady they can be. So it's a bit of a double-edged sword, and the blurred lines between exchange, banks, I think this is where government feels like they have the most reason to step in. So an interesting article here. I wanted to thank BondCrypt XRP just for posting that, and I will link this in the description. I didn't get through all of it. It is interesting because we're also seeing banks like Union Bank of the Philippines working to become the first bank in the country to facilitate crypto exchanges within their mobile application. So banks are looking to do the opposite. It's not so much exchanges looking to become banks, but banks looking to become exchanges. The interesting thing about Union Bank in the Philippines is that they already had partnered with Ripple ODL partner Coins.ph in order to facilitate cross-border transactions quickly and efficiently. So by extension, essentially running ODL through RippleNet, the Union Bank of the Philippines is working to become the first universal bank in the country to facilitate crypto exchange within its mobile app. Users will be able to buy and sell crypto, such as Bitcoin, directly from the banking app, the lender said, doing away with the need for a third-party wallet. In a statement quoted by their broadcasting network there, Union Bank shared its view that blockchain is a technology that will power the future of banking. At the same time, we also recognize that cryptocurrency has been one of the services that a lot of customers are already looking for, especially the younger generation, and this demand was accelerated by the pandemic. So, smart banks are seeing this as an opportunity to jump into the game of crypto. And they almost have a leg up because they are the ones that are already regulated in a lot of ways. In all these countries, right, the banks have already jumped through the hoops to be properly regulated. So now if they want to move into the crypto space, I'm sure it's going to be a lot easier, and this also probably rings true in the United States. It's probably easier for the JP Morgans, the Wells Fargos, the Goldman Sachs of the world to get into cryptocurrency versus the Krakens of the world deciding that they want to custody crypto at that institutional level. I'm not saying that they won't be able to. I'm just saying it's probably going to be a lot harder. And, this is what we're already seeing. The Voyagers and the Celsiuses, they have now become the poster children of why we need to regulate the crypto space, which is unfortunate for the crypto space. But at the same time, again, it's a double-edged sword, guys. It's not all good and it's not all bad, at least in my eyes, because I see this as money's going to flow in. The market cap is going to get huge. The crypto coins that we own, whatever coins they are, so long as they solve problems, they are going to be valuable in the coming years. And this is really going to be a boom for the crypto market in a positive way. So the new exchange functionality will initially be offered to randomly pre-selected users. Okay, so just giving us some more details about this. I guess the point I'm trying to make is the banks, in a lot of ways, they have the upper hand. And so we just have to hope that regulation is at least a little bit favorable to the classic exchanges that we've come to know and love. The Cryptic Poet also bringing this up with regards to Algorand. So just another quick Algorand update. Applied Blockchain announces imminent launch of the Ethereum/Algorand Bridge in Q3 of 2022. Applied Blockchain, a builder of blockchain infrastructure and recipient of the SUPA grant. They received that from the Algorand Foundation. They said they're going to launch what's called the London Bridge in the third quarter of 2022. The London Bridge will allow for seamless and secure integration of Algorand with other blockchain networks, including Ethereum, and will utilize Algorand's state proofs and hardware enclaves to provide bi-directional liquidity flows. So opening up the Algorand blockchain to be able to communicate with all these other blockchains, in this case Ethereum. Just down here, Daniel Yang mentions, he's from the Algorand Foundation. He said, "We believe cross-chain interoperability will unlock operational efficiency and enable permanent TVL transfer while passing significant lower cost and transaction speed benefits with no compromise of network reliability. This partnership with Applied Blockchain allows us to solidify core DeFi infrastructures, which will quickly turn Algorand into an effervescent ecosystem where DeFi can thrive." I'm only hearing positive news with regards to Algorand development, and this is why I just recently purchased another stack of Algo coins. I'm getting really excited about the prospects of some of these projects that are looking to really make waves, ones that are also supported by the World Economic Forum. And, you know, despite what the SEC thinks, we keep getting great updates here. This one from Ashley Prosper. Even Goldman Sachs knows XRP is a currency. So just the other day, I talked about Wells Fargo classifying XRP as a currency. I'll link that video up here if you guys didn't catch that one. But this was published back in May, so only a couple of months ago. And to find the PDF, type AUM XRP PDF in Google. It's the top result. Guys, this directly from Goldman Sachs, their investment research arm. They classified XRP as a currency. And, you know, it's not like they didn't do their research. They know the difference between Ethereum and Bitcoin. For example, Ethereum here, its function is smart contract application platform. Tether, they've listed as a stable coin. Binance Coin, a currency / application utility. Cardano smart contract application platform as well. Dogecoin is listed as a currency. XRP is listed as a currency. Polkadot smart contract application platform, and Internet Computer ICP smart contract / data platform. So, you know, these guys have done their research. They realized the use case for XRP would make it fall in line as a currency classified as such. They've even published it in a report. So SEC, as more American banks are coming out with these reports, it's going to get a lot more difficult to prove your point in court. I think we all know this by now, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.